Hello, everyone. Welcome to another Fratarcangeli Friday Market Update. Here we are, May 1st. Can you believe it? Already in May, and it feels like the year just kicked off. Well, we're coming off of April, which has been the best market performance month since November of 2020. We remember back to COVID and the market correction, and then, of course, the recovery. Here we are in April with a very strong recovery to the tune of 14% since the March lows by the S&P 500. The S&P 500 is now up 5% for the year. Many of you know that we've been watching the markets through March, wondering if we should do something different, debating whether we should get more conservative or stay the course on the plan that we implemented for years and monitor on a quarterly basis. Stay the course. That's going to be our motto for today. But let's talk about a few of the items that are going on out there. Of course, we're in earnings season. We'll come back to that. We have the geopolitical situation, of course, in Iran, a number of developments there. We have oil that seems to leveled off recently between $90 and $105, coming off the all-time highs of mid 125s. And we have a number of things that show that we're probably nearing the end. Although if you listen to the narrative out there, you don't know what to make of it. But you have a number of factors taking hold. Number one, the UAE is coming out of OPEC, and they're going to start controlling their own volume and essentially also taking a different path around the Hormuz Strait. There's some paths that they're going to consider, including new pipelines in the Suez Strait. So you're seeing sort of a readjustment to the realities of the 20% of the logistics that come through the Hormuz Strait. And also we're looking at how this affects Iran. They are in a position where their wells are getting to the point where they're starting to overflow. And if they have to terminate those wells permanently, that would be very bad for Iran, and I believe for us as well. So they have to now burn off oil, which is certainly not bad for our planet. So there's a number of things that are hitting its head, and they're going to have to be some strong decisions being made. I think you can read between the lines how that could play out. So that's something we're watching very closely, but I think we're very close to the end. Let's talk about earnings. Here we are now with about a third of the companies in the S&P 500 having reported earnings. And we're looking at 80% of those companies having beat on their bottom line. And also 75% of those companies beat on their top line. That's a very good sign that companies have strong earnings growth, led by technology so far. A number of sectors have shown strong growth and maintenance of expansion, including financials, but tech is really the leader. We're also looking at the extended year anticipated earnings growth, which will be the fourth consecutive year, by the low teens to the mid-teens. Those are very I'd say very strong numbers that we're watching to maintain that high degree of expansion due to earnings growth in the markets. In addition to that, we had the Fed, Jerome Powell, the Fed chair, his last speech was this week, actually April 29th. We also heard him say that he's going to stay on the Fed Reserve Board, even though he's not going to be the governor, as Kevin Warsh will be stepping in. That'll be a very interesting tug of war there. We'll be watching closely. But I think the uncertainty of what Kevin brings and the uncertainty of change sort of weighing a little bit on the market, that shall pass as well. I want to remind everybody, as we were sitting through March, me included, you're looking at things wondering, should we do something different? Having done this for over 3 decades, I have a gauge for what the energy is of fear and greed and how people are thinking and feeling. And I get phone calls and I talk to clients. And when I start hearing very intelligent, typically calm individuals saying, hey, should we be doing something different here? Or what do you think? Typically what that means is we're at a bottom and we're going to get a reversal. I also want to remind everyone that April is typically the turnaround month, and March is the bottleneck month that we've endured some major pullbacks before we've turned the corner and headed higher. And I can tell you many examples over my career where that's the case. I want to remind everybody, dollar cost averaging, staying the course, maintaining your structure of your portfolio, having enough cash to take you through those uncertain times, and as well making sure your money's working hard for you for the long term that you know you don't need for 5 years or more. Because it's environments like March that'll make us change our direction and pay for that. Imagine if we sold out 14% ago when we were at our lows and we didn't stay the course, or better yet, kept buying and dollar cost averaging, which we did over here at FWM. That's the key. Stay unemotional, stay focused on the objectives, watch the details, watch the fundamentals, and make sure that we understand what our objectives are. I look forward to seeing you all. I expect more volatility. I'll be very clear, more volatility down the line, but stay the course. See you all soon. Bye for now.